Hello, everyone, and welcome to part 3 of lecture 1, semester 2, 2023. Now, in this part, we will talk about the types of financial institutions. Financial institutions are not only banks. We have banks, and in Australia, we have credit societies, we have credit union, building societies. And in this country also, we have different types of financial institutions, including the insurance companies, the mutual funds, the money market. So I will explain all of those. But before I continue, I want to tell you something. Banks still the dominating institutions in terms of their total assets. So let me start now with this issue of so this is the map for them. So we have what we call authorized depository institutions, and we have other financial institutions. When we see DIA, for example, in Australia, when we see depository institutions, authorized EDIs, EDIs actually is based on any financial institution who is allowed to receive money from the public. And so we have and receive deposits and give loans. So we have the banks, which is now banks. When we talk about banks, we can talk about retail banking. We can talk about commercial banking, retail banking for the personal loans, and commercial banking for industrial and commercial loans, big loans, which is business loans. In this country, all our banks, including Public Bank, Maybank, CIMB, all of them actually do retail banking and do what we call commercial banking. So banks is actually the biggest one. Then we have building societies in Australia. We have credit unions. We have also building societies in this country, and I will explain it. And then we have other financial institutions like money market corporations. And we have the life insurance. Now, the life insurance, EPF is part of them. And we have the life insurance, which we know we have so many life insurance in this country. We have also managed funds other than superannuation funds. When I say superannuation funds, it's like the EPF, which is the retirement, the pension fund. And this type of funds are growing. So this is actually the retirement fund. And then we have the general insurance, this general insurance like car insurance, fire insurance, all those type of insurance. And then we have the securitization vehicles. So as you can see now, we have the managed funds, and we have the EPF, and we have the life insurance, general insurance, and securitization vehicles. Now, somebody would say, what is securitization vehicles? Securitization vehicles is actually our organizations. We have one here, big one in Malaysia, called Kagamas. Now, this one will buy the loans. Will buy the loans and back them and make them like bonds and sell it to the investors inside the country and outside the country. But not to worry about it now, because we will cover it in week 3 completely, and we will cover all the securitization vehicles. Now, this is just to map your mind through those financial institutions. Now, the interesting thing is how those financial institutions are progressing in terms of assets, how they are progressing in terms of the services they are providing, and which one still the biggest one until now. I can tell you from now that banks keep dominating those financial institutions. Okay, let me now go to the, this is in Australia. it's the same trend. Also, this data, I take it from the book, but actually it's the same trend. As you can see, if you look at banks, they still taking around until 2011, still the same 60 and 60% and above, either in Australia or in Malaysia. They control 57% or almost 60% in in their total assets. So still these they still the dominating one. Now somebody will tell me, what is this building societies and credit union? These people actually receive money from the public, but I will explain it later on. This came in Australia after the deregulation. Deregulation means in Australia in 1990, actually they changed the, they let those institutions to start receiving deposits, and starting in the 80s actually, and they started to compete with banks, as now fintech companies are competing with banks. Now we have other financial institutions, we have finance companies, we have money market corporations. As I told you, we have life insurance and the funds, which already talked about it. Now this table is reflected here. However, I just want you to look at the banks, looks of the total assets of each one. And as you can see, some of them, especially banks, are growing. Building societies and credit unions, they started from the 80s and 90s growing up, but then they start to drop down. Now, as you can see, this is also increasing. The what we call the ABF. And ABF now is becoming very, very important in this country. For example, they have huge assets, and this is because of the regulations. Now, every employee in the private sector or in the public sector has to contribute. And this is new regulations happened during the last 30, 40 years in many countries. And therefore, when it is compulsory to participate on those ABF, sometimes it was optional, but now it is compulsory to everyone. And some organizations, especially in the public sector, and therefore you can, they start to accumulate all of this money. Now, the interesting thing also, look at the services. This is 1950. The traditional bank services, like the payment services, saving accounts, as you can see here, the lending, the business loans, the underwriting. Underwriting means whether they can buy issues from the issuers. So, see, for example, here in this country, we have CIMB and Hong Leong specifically. I don't know that have you heard about, especially international students. Hong Leong and CIMB is a big banks here. They can promise corporations who are interested to do IPOs, which is the first public offering, and they buy the whole issue for a fee and they sell it to the market. This is what we call underwriting. This underwriting was not actually practiced by bank in the 90s, 50s. They just do the payments, which is the transfers and the settlements among customers and banks. They receive deposits and they do loans, and those loans come business and or personal loans, which we call it consumer. Insurance company, we're doing only receiving, funds for policies. This is what we say, insurance companies receiving saving products. And they provide this also, the they do insurance risk management, which means they provide policies. Then you have all those financing companies, securities firms, superannuation funds. All of them is just receiving deposit from the public. And then, like when we talk about superannuation funds, which is actually the ABF, like the ABF in this country, they receive some contributions from the employees. Now, the interesting thing, this is just data in 2012, and this trend is continuing. Banks, when we talk about depository institutions, like the credit unions and banks and building societies, they almost do everything now. They almost do everything. Insurance company, and this is because of the deregulations, especially when they allow these building societies and the credit unions to enter to this business of banking and start competing banking. So insurance company also doing all of those services, securities firms also doing all those, most of the functions. So there has been a development actually in the function they are doing. And you can see here, as I told you, banks are still the largest depository institution. But if you look at this graph from 1990 to 2010, you can see how big those, the move or in the increase of, especially when we talk about superannuation and the insurance companies, there have been growth. There have been growth actually in their total assets over the years. Now, if you look, what do they do? Just to tell you from now, the biggest part of the bank assets, at least last 30, 40 years, is coming from the housing sector. And as you can see now, residential loans represent 58%. Now, personal loan is actually dropping, and commercial loans is actually not really increasing, stable or going a little bit down. Now, most of the operations is in the local market, 99%. But now banks started to open branches to receive deposit from outside and invest outside, but they still, for example, in Australia, overseas operation is still 3.9%, and non-residence assets other than this 5.3% at 3.9% is actually operations outside the country, but most of it is inside the country, which is 90%. This is actually some type of investments or operations overseas. Now, of the liabilities, where do they get the money? Still, the money, 60% from deposits. You can still receive from the market, like when you issue bills and collect from the market, and you can borrow from the interbank. This is interbank or central bank. This is when you borrow from the market through bills, or you can borrow from outside the country and pay for, this is actually borrowing from outside the country. And this is, I tell you, assets. When we talk about this is assets of this side the country, and this is borrowing from outside. But again, as you can see now, actually the borrowing is increasing. I mean, comparing, it's not increasing, but comparing to the total assets, the investment outside, the non-residence liabilities, which is borrowing from outside, is higher. So this is how the map locks. Now, somebody will say, what do I do? What do I have to do with those numbers? It's just to tell you that there is a take home from this, which is banks still the largest, residential loan is still the largest assets, deposits still the highest liabilities. We can still, there is an operations outside the country where we can borrow or invest, but it's still growing. And you can say most of the operations in the local basis. Now, we have something called building societies and credit unions. Maybe the best one to talk about it is here. So building societies is what? In Malaysia, we have only this one. And now it's already merged with CIMB, and it's a bank now. But when we talk about building societies, they give loans to members. Members actually contribute, and this is for the housing loans. And if you are a member of this building society, they can, as I told you now, they are allowed in Australia to receive deposits and do all those issues. But actually, they are working with their members, and they give them housing loans. Now, credit union is still the same, but actually it's related to organization, specific organization or corporation. For example, Monash can say, or Sunway, for example, group can say, we will have a credit union for all our employees. And this credit union will have a members, which is all the employees and working people and Sunway, for example, we are talking about Sunway. And then they will give loans to the members. So the credit union is a union, like a labor union. However, this is a credit union, but it's actually related to the members of the corporations, and they give loans to the members. And of course, it will be highly encouraged by the corporation. Just some take homes from this changing dynamics of spatialness. First of all, there is a change in demand for particular products. We can see now loans, there is a change. It's not only the loans, it's the residential loans, and they are increasing by time. But we have also other loans like the commercial loans and the business loans. They keep changing. There is too much regulations involved. And this will actually, banks are complaining because it decreased their competitiveness. As we see now, financial institution has to respond quickly to those changes. Especially now, when we are talking about the corporations, when we talk about fintech and its operations, we have to be careful that banks have to take care of that and keep updating themselves. And this is what they are doing. Now they are moving to digital banking. They are moving to, they are updating the systems and actually competing with those startups and the financial technology. As we said, there have been decrease in this part, but increase in this part. Residential housing is one of the most important component in the lending, in the bank lending, and it's very important for the government because it really moves the economy. There have been operations outside, as I said, and there is a large drop. This is when we talk about Australia. There is a large drop in dollar deposits due to retail savings, growth, and superannuation funds, which means now superannuation funds, which is EPF, is increasing on the expenses of the banks. Now, one last important take home, which is the OPS, and we will study this OPS later on. OPS is very important, which is off-balance sheet operations. Now, this is not recorded in the balance sheet. OPS only can be done by financial institutions, specifically banks. Now, this is commitment and with some contingencies. That means it may become an asset or liability in the future, but it's not yet there. And banks do a lot of business in OPS. Derivatives, financial derivatives is considered OPS. When we issue guarantees and letter of credits and standby letter of credit, this all we'll talk about in the future. This is all services to the business community in the country. Banks collect a lot of fees, make a lot of money out of it, almost 40%, and it is growing, but also risky. I am done with this part, and I will see you in the next. I will see you in the next recording. Thank you. Bye-bye.